The trade rally continues, supporting the equities and other also markets. The effect is spilled over onto European stocks as well. We have a very big week ahead on many different stages. We have the ECB, the Bank of Canada, and also the Bank of Japan interest rate decisions. We have the impeachment trial, Davos Economic Forum starting in Switzerland, and of course the US earnings continuing on the second week. Last week we've had consumer sentiment from China justifying the latest moves and optimism, let's just say, from trade war. I want to start with the index, the US index today. We've seen on Thursday the US retail sales reporting good numbers, 0.3 as expected, if not mistaken. We talked about this months ago, about this longer term move to the downside with waves 1, 2, and 3, or it could be an A, a B, and a C. We don't know that yet. Now, what currently is happening, we are seeing a move to the upside. For me, this is 1, 2, 3, 4, and 5, right? So when the end of the minor move to the downside over here, and we seem to be correcting. It could be an A. This looks like an A, B, and a C, to be honest, right? So wave 1, 2, 3, 4, and 5 is likely done or could extend a little bit higher to the 61.8 Fibonacci retracement or to the 78.86 and then move lower to complete wave 3. If we see these becoming an A, B, and C, that means that we would be able to even see this as an ABC as well. So we could have a double combination here, okay, which would suggest that prices could extend lower anywhere to take out the 96, which is 100 Fibonacci extension of waves A and B, or 1 and 2, 96, and then move all the way to the upside, given, of course, the US data supports the US index. The other scenario, of course, would be that we get a break below the 96 and we continue with waves 3, 4, and 5. In the short term, I will be looking to see whether bears are getting an invalid signal, okay? So if we break above the 92, 98.21, which is wave 1, okay, of this last move to the downside, 3, 4, and 5, then it means that we have a valid signal to at least not move to the downside, okay, because that would mean that this is not an impulsive move to the downside. So most likely we'll be looking at this becoming an ABC, and although corrective, this one, we'll be looking at that being another sort of correction, which means we should be looking then to move all the way up to 98.63 and then to even hundreds. In the short term, I will be looking at this being an A, B, and a C, which means 1, 2, 3, wave 4, and wave 5, just taking out the 61.8 Fibonacci retracement down here, right? Which means now we should be looking at prices to start moving lower, supported also, of course, by the MACD and a little bit by the RSI. The S&P has been joining the trade war rally. We've had these, I've said before, right? Correction over here, expanded flat. And since then, we started moving to the upside with waves 1 and 2 in the intermediate degree having completed already. Now we're waiting for wave 3 to complete. Now, if I just come a little bit closer to, just so that it makes a bit more sense. We've ended these wave 2, sorry, or it could be B, wave 2 with a triangle, and we moved up. I see this as wave 1, minor 2, then I would be expecting wave 3 at least to 33.75, at least, yeah, and then 4 and 5. That is going to complete wave 3 intermediate, and then we should get again 4 and 5, and then see the big correction everybody's been expecting. So we're really talking about another swing to the downside, another swing to the upside, and then start talking about a crash potentially after the Q1, maybe even after the Q2, right? In the short term, what I'm seeing is an impulsive move to the upside with waves 1 in the minute wave 2 and 3 completed or likely to complete even higher, okay? Then we should get 4 and 5 to complete minor 3, then again 4 and 5 to complete intermediate wave 3. Now if we go a little bit closer so that I can explain a little bit better what I'm seeing here. Oops, 1 second. We've had the first wave to the upside, right, over here, and that ended completing in a smaller degree, in a lower degree move. The 161 extension of waves 2 and 3 and 4 comes to 33.38, which is where I'm expecting wave 5 to end, right? And also potentially wave 3 in the minute degree. Now, if we take this extension over here with waves 1 and 3 and 1 and 2, the wave 3, minor 3, can come to around 33.75 or anywhere higher, okay? Because we expect wave 3 to be always bigger than wave 1. So I wouldn't be surprised if we see prices moving a little bit higher and then start moving lower for wave 4, okay? Or we could just start seeing a correction which is supported by the MACD and the RSI, okay, for at least the minute wave A, B, and C. We could take prices down near the 32.57 or so to have a nice correction there at previous wave 3, or we could go even down to the previous wave 1 around 31.89.